The issuance is of both secured and unsecured bonds. The base size of the issue is 3,500, with a choice to us to also have a green shoe of 3,500. So at peak, this can be a issue of about 7,000. On the secured bonds, we have three options: 3, 5, and 10-year options, which start from a QIB offering of 3 years at 8.55 and go up to 9% for retail investors for the 10-year option. We also have an unsecured option of 10 years, which is essentially our tier 2 capital, where to institutional investors we are offering 9% and to retail investors 9.15%. All instruments under the offering are rated AAA, which is the highest possible credit rating. And we hope to open the issue on the 15th and close it on the 23rd. Management also reserves the right, the company also reserves the right that in case the demand is strong and overwhelming, we can potentially close the issue earlier than the 23rd.
Okay. You've just raised Masala Bond now that you're coming up with the NCD issuance. Are you looking at any other round of capital raising? Also, how is the spread changing when it comes to bank finance?
So we ended last year's balance sheet with about 76,000 crores, and we hope to grow that by between 25 and 30%, which should get us past the 1 lakh crore mark. As we prepare to do that, we have to finance ourselves on net basis by approximately 25,000 crores, of which approximately 65 to 70% is going to come through bonds. We've already, besides this issue, raised about close to 10,000 crores of bonds in the first half. And with this, we will get to about 13.5 to 17,000 crores of bonds. So overall, I think our bond borrowing program is more or less over for the year. Definitely in the calendar, we have no plans to come back to the retail markets. On private placement basis, opportunistically speaking, we may raise up to 2 to 3,000 crores through the course of the rest of the fiscal year. But that apart, now our focus will move more to the securitization market to fund our growth. On cost of funds, I think our spread guidance is between 300 and 325 basis points. We ended 30th June with a spread of 318 basis points. We are in parallel to evolving our liability program and doing masala bonds, retail bonds, and everything else. On the asset side, are also growing our dependence on home loans as an asset class and increasing that to 65% over the next 2 to 3 years. For this year, our goal is to get to about 60%. And as we do that, and as everyone is well aware, home loans is the safest asset class, but is also very competitively priced. We hope to be able to maintain our margins in this range of 300 to 325 basis points and use the savings from the bond offerings that we have to accelerate the pace of home loan growth within our balance sheet without negatively impacting our margins. So broadly, our profit guidance of 20 to 25% growth stands. Now with this tremendous demand for our bond program, looser liquidity in the marketplace, a more almost stated policy stance of the central bank that liquidity will not go back into the negative zone as was the case for the last 6 years, at least in the near future. And overall acceptance of our credit. My sense is that we should be in a position to hopefully report at the higher end of the guided range on our profits.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.